Hey guys, welcome back to the Dude Real Estate Show. Today we're going to talk about partnerships as it relates to real estate investing. This is a big one. It's really hard to take down a deal by yourself. So we're going to talk about partnerships. And I've got Billy back here. He's in the hot seat once again. And Billy, first of all, how are you?
I'm well. I'm doing well. How are you?
I'm good. I'm good. I'm excited to talk about partnerships because for me personally, I know I would never have gotten involved in real estate investing without partnerships. But you're no stranger to partnerships either because you own a business with a partner. So why don't you tell us a little bit about how that evolved and maybe the difference that's made for you?
Sure. I 100% agree. I would not be in a business right now without a partner. I think the big thing for me was I didn't have the capital to get into the business by myself, or I could have, but it would have been a stretch financially to make it happen. So it definitely made more sense to seek out a partner. And actually, the partner is the one who found the deal. So he brought it to me. We met at a local meetup. So highly recommend getting connected with the local meetup or starting your own, specifically in real estate. I know you started your own back in, I don't know when, but so I definitely think that helped. Like I said, I wouldn't be where I am today. So it started just meeting him there, and then we met outside of the group. We did a dinner together and just talked through the deal and if it made sense and kind of our strengths and weaknesses, and then we just jumped in and the ball's been rolling ever since.
Okay. So did you guys meet at the real estate investment meetup?
Yes, correct.
Okay. So you met there at a real estate investment meetup, but you guys decided to partner on a business. So why did you guys decide to partner on business instead of a real estate deal?
That's a good question. I think we both had more interest in looking into a business focused or a business because it just had different options for us. My partner had done a couple real estate deals already by himself or with another partner there. And we both had a desire to go into the business sector just because we felt like there could be good returns there. And it allowed us to potentially get a better return on our investment to get started. And that's how it started.
Right. So you mentioned a couple things there. You had mentioned, first of all, that you guys met at a meetup, which is why, yes, everyone should go to meetups. I know right now most of them are virtual, but yeah,
Hmm.
attend the virtual meetups. That way you can attend really almost anywhere in the country. You can go to meetup.com or Bigger Pockets, and there's an events tab there. You can look up, all these different meetups, and a lot of them may even focus on different things. Like sometimes there's like apartment investors or
Hmm.
it's just, but a lot of them are more to like a general thing where it's just talking about real estate investing, and it's a good way to meet people.
Yeah.
It's a good way to learn. It's a good way
Hmm.
to kind of explore, especially if you're new, just to kind of soak it all in and explore the different things. Because usually there's going to be different topics discussed. Sometimes they may bring in a speaker or someone from the group might speak on a topic that they're kind of an expert
Hmm.
on or have experience in. And so it kind of gives you a taste of everything that's out there. And then what's nice about them is if it's not too big of a group, you can go and chat with that person afterwards or talk with the person
Hmm.
next to you about it, and really just get feedback, instant feedback on a particular way of investing or whatever the topic is. So it's a great way to explore different options. If you don't know exactly what niche you might want to go into, or you don't know how you're going to tackle, financing or whatever it is,
Hmm.
great way to meet people and to up with people. One thing I like about our group, um, it's a little bit smaller. I would say typically we have like what 30 to 40 people ish,
Hmm.
and meets every couple weeks.
Hmm.
And what I really like about it is that it's super collaborative. It's not like one of these guru meetups where they have products to sell you and stuff like that. That's not what our group's about. It's purely gaining knowledge, networking, having some fun. And So yeah, I forget where I kind of lost my train of thought there, but it's important to get involved there. And then like Billy said, if there's not one that's close to you or in your area, which actually is not an excuse right now at all, because if if you're watching this, listening
Perfect.
to this, you have a computer or a smartphone, you can
Yeah.
really attend any meetup anywhere you want.
Mhm.
You might have to give your email address or something like that, but you can hop on a Zoom or a Skype meeting like this and just listen in. And so yeah, they're great places to develop these partnerships. But back that collaboration point is that a lot of people have different strengths. And
Mhm.
so someone might be really good at finding deals, but then someone over here might have the funding mechanism.
Mhm.
Um, so I see a lot of people doing deals together. And like you said, you guys, it was kind of combining your funds and your superpowers together to make,
Mhm.
you know,
Yeah.
something happen where, like you said, it wouldn't have happened if it was just you. And it probably wouldn't have happened if it was just him.
Mhm.
And I can definitely say that's true for me. Like I would not be investing in real estate probably at all without
Mhm.
my buddy and my partner, because we have different skill sets. I'm not really um, organized or good at like the bookkeeping, the finance side of stuff. Like I'm just not really good at. I'm not really interested in that stuff. I'm more big picture. I like finding deals. Um, I don't mind managing, some of the process of getting from point A to point B, because there's like a pretty easy or a quick end goal in mind. It's you got to get that property and then you got to get it managed, and that's pretty much any real estate in a nutshell. Is you
Mhm.
acquire it and then you manage it, whether it's a flip or a long term rental. So
Mhm.
yeah, partnerships are huge in real estate. I think we alluded to this in one of the earlier sessions, but you can't take down a deal by yourself. Like it's literally impossible. You
Mhm.
need to have, in a lot of cases, you need to have a realtor, you need to have an attorney, you need your financing lined up, you need your home inspector, you need, what else? You need a title company,
Mhm.
you need insurance. So there's all these people that have to come together just to make one deal happen. And a lot of times it takes multiple people like you and me or our partners to collaborate with us, whether it's financially or just to put our skill sets together, our resources together, so that we can all work together to get it done.
Mhm.
Um, so yeah, that's why the big why, I guess, the big picture of partnerships and why they're
Mhm.
really important. There's a couple different ways to think about it, I guess, because I think a lot of people have the question of, well, how do I go about finding a partner? And I think what you said, go to your real estate meetup, is probably one of the best things. Like network, it could be with your family or friends. You just have to be careful about vetting your partnerships as well.
Mhm.
And probably what I would suggest doing if it's like your first real estate deal
Mhm.
and you need to partner with someone somehow, I would make it basically what they call a joint venture deal, which is basically just two people agreeing to some basic things like, hey, I am going to do all the legwork. You're going to be putting up the money. We're going to get this deal done. And then essentially you find it, you have it laid out ahead of time. Like this is how we're going to part ways. So this works really pretty cleanly in like a flip
Okay.
where there's a fairly concise timeline. Just call it 6 months. You go buy a property, you rehab it, you sell it. And at that point, you guys can split up. Now, the nice thing about that is you gain some experience. You see maybe if they're a good match for you, if you're a good match for them.
Mhm.
And then if it is, then you can continue to do JV deals like that, or maybe you actually develop a true partnership. And what I mean by that is maybe you go into business with each other, as co owners in a company, like, put an LLC together. And that's what me and my buddy did. We were, 50-50 owners in our LLC. And so that's
Mhm.
how that operates. Now, some people are scared about that a little bit, and I get that. But at some point, you're going to have to realize that it takes a lot of people to take down, real estate deals. It just does. Unless you already
Yeah.
have, millions or billions in the bank, it just takes a lot of hard work, and it takes some partnerships to get these deals done. All these guys buying, 100, 200 unit apartment buildings, they're not doing it by themselves. They're pooling investors and they have partnerships and they have boots on the ground and they have this network of people. It takes a lot of people to, buy a $10 million apartment building.
Hmm.
It's really hard just to do it by yourself unless you're Mr. Moneybags.
Right.
Um, so I know some people though are still hesitant
Hmm.
to do partnerships because maybe they've been burned in the past,
Yeah.
which can certainly happen. Um, uh, Give me your thoughts on, when you met your partner. I mean, was it just kind of like a feeling that you had? Was it just because you had these couple of conversations? Did you see him in action in another area? How did you kind of go about vetting him essentially?
Yeah, that's a great question. And I don't know if I did like anything on purpose. It was more of like just seeing a couple things and I was like, okay, I think this guy's gonna be a good fit for me. Um, I had been on the Slack channel for our meetup, and saw that he was actively doing real estate. And that was something I wanted to do. I wasn't there yet. So when I went to the meetup and met him in person, I had questions about some of the stuff he had been doing. And I just kind of we just talked, and we talked about our interests and what where we want to go. And that really helped. I think going back to the start of all of this, figuring out our whys. Why are we doing this? I mean, I still kind of had an idea of why I wanted to do this was to get more of my time back. So from there, we were just like, okay, well, we believe this is a good business opportunity for both of us to help us reach our goals. After getting together and having dinner, why don't let's pursue it? And I think that was the biggest thing is we just ran with it and jumped in with our both feet. And I think that has been a huge benefit for both of us financially, as well as the experience we've gained from running this business.
Right. Yeah, for sure. I did have a bad experience. So I'll tell you a
Sure.
story of a partnership that did not work out.
Yeah.
So I'd started this with my buddy, and we're on the same page. We have like the same long-term goals, which I think is really important. If you don't have the same long-term goals and the same values,
Hmm.
don't partner with that person, at least not in a long-term way. Maybe you do a JV deal, but if people want different things, then
Hmm.
they're going to act differently and maybe treat the business in a different way. Like if someone wants to get paid out in a year, but you're looking at a 10-year horizon, that's just not going to match up. So it's really important that you're um, on the same page with your goals as it relates to whatever you're doing with a partnership.
Hmm.
So I'd set up this with my buddy, and we were just like kind of like 100 units in 10 years or whatever. And so we had this long-term view. Essentially, we would divvy up the labor however we saw fit, whatever needed to be done, we just kind of do it. And partnerships to that point are never equal. It's never really on paper it might be 50-50, but someone's always going to be doing more work than the other one, and it's going to flip-flop too. So sometimes you're going to be doing 70% of the work, but then other times your partner is going to be doing 70% of the work. So it depends on what's going on and what your strengths are, and maybe even what time of the year it is. Like I said, I kind of am terrible at bookkeeping and all that kind of stuff. So my buddy takes care of all that stuff. So when taxes roll around tax season, he's kind of lining everything up to give to our CPA. So that's huge. Like I said, I
Yeah.
wouldn't be doing this by myself probably. I need help. But if I can do it, you guys can do it for sure. And so I had this, I wanted to flip properties, and this was not in alignment with my buddy's goals. He didn't want to flip properties, which was
Hmm.
fine. So I went and I started another LLC, but I was looking for a money partner. So I found a money partner,
Hmm.
and essentially it was that one of those things. He put up the money, I did everything else because I was the realtor. I managed the work, I find the deal, I sell the place, take care of the financial side of things as well. Just I did everything else. All he did was write a check. Um, Now, in theory, that sounds really good, but like I said, that some people's values are different than yours, and I kind of found out into this that um, our values just weren't the same. Um, and he was a little bit are a fair amount older than me too. So, our time horizons were different too, which is a little bit less important when it comes to flips. But if we were going to do any other deals, that would have mattered quite a bit. So, you know, we did one deal. It was my first flip. We made money, but after that, I decided to buy him out and own the LLC all myself. So I still have that
Oh,
LLC to this day, and I flipped 5 more properties after that. But what I did is I brought like private money in on case by case basis, essentially a JV deal, and
mhm.
we would just structure each one that way. So yeah, you do have to be careful. You do, I think, like you said, you guys had dinner, you guys had conversations, you're part of the same group, talk through kind of your goals, your values, and then you kind of get a sense of a person and can I do business. I think it's really important here to listen to your gut. um
Mhm.
if there's anything kind of nagging, because I've had experiences too where I really like a person, like a lot,
Mhm.
and they want to do something together, like a business, and but there's just something that's like everything seems good on paper or whatever, and most people just kind of run with it. But you got to listen to your gut, and I think that protects you if there's some sinking sense like that something could go awry with the relationship or something like that. So yeah,
Mhm.
you do have to be careful, listen to your gut, listen to other people around you too. But take everything with a grain of salt as well, because they have their own agenda a lot of times too.
Right.
So at the end of the day, it is up to you who
Mhm.
you're gonna partner with on this stuff. So all that being said, I mean, I think that covers a fair amount. Do you have any questions, like specifically to maybe what a JV deal looks like or a long-term partnership, anything like that?
I'd be curious when when you got with your buddy, did you guys vet each other at all? And it sounds like you guys were friends before this. Is that
Right.
common, or do you feel like that's a good situation to go into with a friend, or is that can be difficult?
Some people will say yes. A lot of people will say no. A lot of
Mhm.
people say don't go into business with your family, which I tend to agree with that a little bit.
Mhm.
I
Mhm.
don't think I'd ever want to really go into business. I mean, I love my family, but I just there's too much stuff that can go around wrong in business or real estate, or people get
Mhm.
there's a lot of emotions involved when there's a lot of money on the line too. So
Right.
um, if you're able to handle it and they're able to handle it, it could potentially work out. Or if specifically that's kind of the family business anyway, everyone's already in real estate to some degree and they already understand what happens. But if it's someone who has no experience, they're in for a ride a little bit, because
Right.
there are a lot of emotions and there's things that go wrong and there's things that end up being way more expensive than you intended, and there's things that happen like that. So you have to be prepared for kind of worst case scenario a lot of times. So it's
Sure.
not ideal. You don't want to ruin a friendship or another relationship
Mhm.
over something like that. So yes, we did know each other for a long time. We were friends for a long time, and we
Mhm.
just kind of got the real estate itch around the same time. We I don't even remember exactly how it came about, but I got the bug. I was listening to the Bigger Pockets podcast and stuff like that, and
Mhm.
I talked to him. We had been talking, maybe we were golfing or something like that, and um, he must have mentioned it or I mentioned. Who knows how it came up exactly, but
Yeah.
we had a couple more meetings after that, and we're like,
Mhm.
yeah, let's do it. Let's get it set up. And so I think for us, we already had that a very solid friendship, a very solid relationship, and he already had a little bit of experience with acquiring and managing some of his family's properties. So
Okay.
yeah, he had a little bit of knowledge there. Obviously, he came from a finance background too, so that was very helpful. And then I kind of covered the realtor side, all that kind of stuff. So it ended up, yeah, it's been a great relationship. And you have to also be comfortable telling someone if they're wrong or if you don't like their idea. I mean, we talk once or twice a week about certain things, and it's not necessarily even about real estate all the time, but
Right.
we're always talking about different business ideas and stuff too, and we're like, dude, that's a silly idea, or you're going to hate that, or because we can be more objective, but we are not afraid to tell the truth either.
Yeah.
So it's got to be definitely based on some sort of foundation of trust, and there has to be some sort of vetting process in place. Just get to know people, and over
Hmm.
time you'll figure out um, if they could be a good fit, and just see what kind of track record they have too. Are they good, ethical people when it comes to anything? Um,
Hmm.
so there's a lot of different ways to check that, but yeah, you just get to know people, and I think you can figure out who is and who isn't.
Yeah. 100% agree. I think, like I said, I don't think I'd be here even on this today talking with you without, meeting people and just talking and learning about them and, seeing what works best. So yeah, 100% agree with that.
Nice. Well, yeah, I think partnerships are really interesting. A lot of people are very scared of partnerships because there is a lot on the line, and a lot
Yeah.
can go wrong. But uh, don't let that get in the way of going after your dreams either, because there's definitely ways to protect yourself. With
Hmm.
contracts and have an attorney involved to draw up some agreements, stuff like that. So
Hmm.
if everything's out in the open and you kind of protect yourself in a way too, that even if things did go south, there's a way to mitigate any really awful
Yeah.
fallout from something like that. um but yeah, just make sure that you're careful, but don't let that get in the way of going out there, because like I said, it takes a team, it takes a lot of different partnerships to get deals done. And I really do encourage first time investors to go partner with someone probably in their real estate networking group.
Hmm.
Partner with them in some way. Now, it could be a JV deal, um, or it could just be you're kind of tagging along in a sense. Hey,
Yeah.
I want to watch you do your next flip, or I want to go through the process of your next acquisition, whatever that is. Or
Hmm.
even something as simple as like, I have no idea what goes on at a home inspection or at the closing table. Ask your realtor friend if you can tag along, get some experience, see what's out there, ask questions, meet some people.
Hmm.
um, yeah, so I would definitely encourage people to work with someone in their group. Could be 50-50, might be a different um, kind of split depending on who's bringing what to the table, but at the end of the day, you just want the experience, and you want to see if potentially you guys work well together. And if you do,
Hmm.
that's awesome, because then you could do tons of deals in the future.
Yeah. Do you think there's like three things you would say you should do to vet a partner? Like, what's the top three things you need to know about your partner to do a deal?
Ooh, putting me on the spot. Top
Yeah.
three things. Well, I think the top thing, like I said, is listen to your gut.
Yeah.
So definitely pay attention to that. And some people are good at that, some people are not. But if there's kind of like some sort of nagging feeling that maybe it's not right, like don't feel that like, oh man, this deal's going to get away. There's always another deal, and there's always
Hmm.
another partner. There's 7 billion people in the world. I'm sure you can find someone who's better. um it just might take you a little more time. So yeah, definitely listen to your gut. um Number two is like I just kind of said, is partner with someone in your group that you
Yeah.
you already know has a track record.
Hmm.
And I use that word partner lightly there, it really could just be, I want to watch you through an entire deal. And I'm
Right.
sure most investors are going to say, sure, yeah, go ahead. um, and you can ask questions and all that kind of stuff. Number three, when vetting a partner, yeah, just like what you did, you guys had a couple, you know, conversations. You went out to dinner. You just talked. Like it's just you're building a relationship. So I would almost say it comes first from like building a relationship, not even thinking about a
Hmm.
partnership necessarily. But as you go to these networking groups, you're going to click with different people. Certain personalities just blend really well, and so you're going to connect with certain people, and
Hmm.
those might end up being the people that you do a deal with.
Yeah. Yeah. That makes sense. I love those three.
Oh, phew, I did okay. All right. We're going to wrap this one up. But yeah, we'll see you guys in the next session. Good luck with those partnerships.